Good morning, everyone. Thank you for hopping on today. We have a full agenda for this morning, so I don't want to waste too much time. Hello to the familiar faces. Uh, Thank you for joining us again this month for our monthly webinar. I do see a couple new attendees on. So for those of you who don't know myself, my name is Thomas Purcell. I'm the director of our employee benefits department here at URL Insurance. We are a independent brokerage, so we've been independently owned and family operated for over 30 years. We handle life, Medicare, annuities, and other health plan options such as Penny and Medicare. So I handle the employee benefits. We've been doing these monthly webinars for a little over a year now. This is the second year. A lot of great content that we're going to be going over this year, but I don't want to waste too much of your time. We're going to get into it this morning. So my guest today is Gus Bello. Gus is from the Difference Card. We've been working for the Difference Card for some time now, dating back to beginning of last year probably, and it's been a great relationship, specifically working with Gus. We're very relationship driven. I do see some current clients on the call today, so you know how we like to get in front of people and be very hands-on with our education and be informative, and Gus does a really good job of that. So this is a concept we've introduced to a few of our clients already this past year. A few of our clients have entertained the thought and we're targeting next year. But for those of you not on the call, I hope you get a lot of value out of this. And we're going to be talking about the Difference Card and what Gus offers. So questions you can type in. I'll address those at the end. On the right-hand side, there's also links under the handout section that will take you to URL's website where you can access all of our webinars. So if it's a Medicare webinar that you wanted to see Christy Wilbert put on a show for, you can access those as well as any of mine or the life departments for that matter. Okay, I think that's it. Without further ado, Gus, take it away, sir.
Good morning, everyone, and hope you're not getting a lot of snow where you are throughout the country. Here we just started here on the East Coast. We just started to get a little bit of snow, but I want a special thank you to Thomas and the URL team. As Thomas mentioned, we've been working for a little bit over a year now. It's been a great relationship, and we really enjoy working with them. Now, I'm going to be looking to my right a little bit. That's just because I have the presentation on a larger screen, so I don't want you thinking I'm doing something else. I'm not. It's just that my camera is facing me, but I'm using the largest screen. So, okay. The Difference Card, what is it and what do we do? So the Difference Card is actually a 22-year-old company now. This year is 22 years, headquartered in White Plains, New York. And the easiest way to think of us and what we do as far as the MERP, which is called a Medical Expense Reimbursement Plan. It's filed under Section 105 of the IRS tax code in case you want to go out, read it. And if it makes great bedtime reading if you want to do that. But the easiest way to think of it, what it is think of it as a medical gift card. So just keep that in the back of your mind as we go through the presentation. So a medical gift card. And who do we work with? We do not replace your current insurance consultant broker. We work with your insurance consultant. We work with CPA houses. We work with CFOs. And again, in conjunction with them, we bring our service alongside by them. So that's important to remember. We are not here to replace anyone. Let me just undo this for a second. Okay. Why do we exist? One of the things we're looking to do is lower health insurance renewal because the last couple of years, the increases have been skyrocketing, especially now you've seen it being accelerated after the pandemic as far as post 2022. So that's why we exist. We're here to help slow it down. We're not going to be able to fix it because that's a long conversation for another day, and that requires Congress to interact. But what we've seen over the last couple of years is premiums have increased by 55%. Deductibles have increased by 111%. I remember the good old days when I had a $200 deductible on my plan, and I thought that was crazy and outrageous. Well, I wish those days were, back. And the average cost for a family is over $21,000, depending what part of the country you're in. But that's the average. Very, very high. There's really only two ways to fund health insurance, and it doesn't matter where it's being funded, as far as whether it's outside in a commercial or in a private or with multiple associations. There's really only fully insured and then self-funded. And then level funded is a hybrid of a self-funded solution. Where we sit, the MERP, the medical expense reimbursement plan, we sit between the fully insured and the self-funded, where a group will dip their toes in the water. You still keep your fully insured plan or your level funded plan with your insurance carrier. You do not have to switch your insurance carrier if you do not wish to. And then what we do is we look at certain components of a plan. Primary care visits, specialists, urgent care, emergency rooms, deductibles, prescriptions. Why are we looking at that? A lot of folks have very rich plans, and for the most part, health insurance follows the 80-20 rule. 80% of your population is not really using health insurance, 10% is using about $2,000 or less, and then the other 10% are the high utilizers that might have certain diseases or conditions ongoing. So if you think about it, really 20% is using 80% of your overall spend. So we're here to help. And what is the solution that we bring? Well, before I get into the solution, these are some numbers. They were updated for 2022. So we've provided $225 million in savings. Our average savings per client is about 18%. Some companies are more, some are less, but that has to do with certain components, certain variables, which type of plan, which insurance carrier you have, what are the plans available. So a lot of those are beyond our controls, but we still are able to bring 18% savings. And that averages about $280,000 per year per group. And as far as a member, it's about $3,262 per member per year in savings. Currently, we have over 158,000 members. We're averaging 36-second speed of answer when we get calls, and we process when we need to process claims in 2 days or less. So we're actually doing a very good job, because customer service, I know it's a cliche, but it is the most important thing that we can offer here. Okay, on the left side here, you're going to see what your current plan might look like. Again, we are insurance carrier agnostic. It does not matter if you have Blue Cross Blue Shield, Highmark, Kaiser, Independence Blue Cross Blue Shield, Aetna, United. It does not matter, because our solution can plug and play with any insurance carrier. So you might have this type of plan here. What we look to do is we stay within the same insurance carrier, the same family of plans, same network. So there's no disruption as far as networks. And we look to buy down the plan design. Why are we doing that? To get monthly and yearly savings, to get relief. Now, when we do that, of course, well, aren't you exposing my employees to more higher copays and deductibles? Yes, but then we take that information, what type of company you are, where you're situated, what type of plan, what it is your census makeup, do you have more singles than families, what's your average age. When we take that and we send it in through our underwriting group, we have 5 full-time underwriters. They are ours, W-2 employees, and these folks have years of experience. They came from other insurance carriers. And we brought them in-house. And we'll analyze that, and then we'll come up with a financial analysis. As an example, we know if you're a company in certain parts of the country, like Alabama, Georgia, or Mississippi, and you're a male and you're certain age, there's going to be higher incidence of possible strokes, heart attacks, because of the lifestyle, the type of foods that you eat. So even that type of information, we have underwriting statistics on it. But what we do is through our card technology, through our MasterCard, we rebuilt the plan that you had here. And in this case, we actually enhanced the primary care visit from 25 to 20, the specialist back to 40, the emergency room back to 100, kept the deductible at 0 because we're funding the deductible. And then the prescription card, we kept the same. And this is what a typical card would look like. So the member, what do you do when you go to your primary, your specialist? Right here, it tells you what to do with this card. Swipe for this amount. Okay, so I'm keeping it as simplistic as possible, and I'll show you in the next slide what that might look like. So this is a company of mine going in for a 5/1 effective date. It's about 92, 93 employees. So this is what their current spend was on health insurance. This was what their renewal, which was at 20.7%. And then we bought down. When I say buy down, we looked at, this is a Horizon Blue Cross Blue Shield plan. We came down in the medical plan. And then when we put it in all the claims utilization, the expected claims, our service fees, and what you're going to pay the insurance carrier, 2.918 million, they were going to go up to 3.55 million. So it's from a 20% increase down to a 1.9. And this is what the savings would be. And I'll explain this in a second. So how does this look? Hopefully you can expand on your screen. You can zoom in. But if you look here on the left, this is their current plan. So they have what's called the New Jersey Direct 10 plan. These are the copays. What we went back to Horizon Blue Cross Blue Shield with the insurance consultant, with their help, we were able to buy down to a New Jersey 2035 plan. Same family of networks, same doctors. There was no disruption as far as procedures, ongoing surgeries, things of that nature, just different copays. So we were able to get the rate relief down. Let me just go to so I can see it better. So we went from 2,000,001 to an increase of 2,000,006, back down to $2 million. Then on our end, through our technology, our card, we rebuilt the copays to what they had. $10 copay, they were at 20. They were at 10. We bought the plan down to 20. We rebuilt it back to 10. So we're keeping the member, the employee, whole. They're not paying more out of pocket, but we lower the yearly contribution down to almost what they had. So the employee was at $997 last year. They went up to $1,204 for a single rate. Now they're at $1,025. And when you look at as far as funding, whether the employer pays 50%, the employee pays 50 or 60, 70 or 70, 30, both win, the employer and the employee, because their monthly spend came down, their yearly spend came down. Here's another example. This is with Oxford, 32 employees. Here's what they had, $348,000. They actually had a 0% increase, believe it or not. But we were able to go out and find a plan with Aetna. This group was open to switch insurance carriers. We looked at the doctors and the clinics and hospitals where we did what's called an overlap analysis, and 98% of the doctors, specialists were in the same network. So that was not an issue for us to switch over. But in this plan design, we went from 348 to 186, a 40% savings. And this plan has some unique features. The first 5 visits for urgent care is 0 copay. So We were able to duplicate what the employee had. So here they had a $30 for primary, 60 for specialist. We were able to bring it down to 55. We brought over the same thing, first 5 visits, because that's the plan, the underlying plan. The prescription card, we kept it at 1045.70. But as you can see, the employee went down from 481 to 430. These numbers here is the current medical plan, and then how we got here, the premium equivalent rates. It is our fees and the expected claims utilization. So we're able to blend that. In a medical expense reimbursement plan, both the employer and the employee are allowed to share in the monthly expense. Again, if you go 50-50, if the employer is paying 50%, they went from paying 50% of 481 down to 50% of 430. Same thing for the employee. So their monthly spend is going to go down, but the employee is not paying more out of pocket. They're made whole. For this company, this is a 35-person company. This company was in the healthcare, is in the healthcare industry. So they were having a hard time attracting employees because of the current labor market. And a lot of companies will look to do something like this to either create better benefits at a lower price point, or create these type of plans so they can attract and retain. A simple way to explain this is, if you're familiar with the metallic level of plans, you have platinum, gold, silver, and bronze. Think about this, the way this is designed. Currently, you might have a platinum plan. You're paying platinum monthly rates, and you're paying platinum yearly overall rates. What we look to do is go down to a silver or a bronze and then rebuild it back to a platinum as far as the level of the benefits. But now you're paying for a silver plan or a bronze plan, but yet you're offering platinum benefits. So that's an explanation that sometimes it's easier to understand what we're doing here. So again, same thing. Here's the current plan design, 35 employees. Here's what they were paying. No price increase with Oxford. Here's what the Aetna EPO. As far as switching, we encourage to look. We encourage our insurance consultants and the groups we work with to stay with the same current carrier. Again, we're not driving that. We're not saying you have to go out, but sometimes to find rate relief, you have to go out. But that's really up to to each group, and it's really up to the insurance consultant, because we understand, depending where you are, there might be some overlap. There might be a gap for certain specialists and doctors. But here we are. The rate went down from 406 to 242, a 40% decrease. We were able to rebuild the plan, but if from 406 to 328. But in this scenario, because there was enough savings, what we did is this group had a $4,000 max out of pocket, $500 deductible, 20% coinsurance, and then $3,500. So 35 and 5, 4,000. Here, it became $7,350. But because there was enough savings and the company wanted to attract employees, we were able to enhance the specialist copay to $50, but we brought down the max out of pocket to $2,000. So $500 deductible, same 20% coinsurance, but now only $1,000 versus $3,500. So now the employee had a $4,000 max out of pocket. Here they have a $2,000, and also their monthly rates went down. Oh, and by the way, we also enhanced their prescription card. They went from a $10 to a $5, 35 was up to 40, but 70 was down to 65. So overall, this was a good presentation bringing to the client. They were very happy when they saw this, and and they're able to bring a very robust benefits. This is a guarantee that we offer each client, which is underwritten by Assurant, AAA insurance carrier, global insurance carrier that's been out there. And what I mean by the guarantee is when we give the financial analysis, we guarantee those are the numbers that a group will pay for. If for some reason you happen to go over, then the insurance, what's called a stop loss, will kick in and you won't pay an extra dollar. So there is a guarantee in there. So you could have, for budgetary purposes, and also to understand that we're not going to pay more than we were told we're going to pay. One of the things that you do, certain groups, if you're under 100 employees, you get very little reporting. You get your yearly increase, but you don't know how many doctor's visits, what your ER visits were, how many prescriptions. From the first 30 days on, you can get transactional reports. You're not going to be able to see per member because of PHI information, private because of HIPAA laws, but you are going to be able to see how many optometrist visits, how many hospital visits, how many office copays, how many in-network deductibles were utilized, how many x-rays were utilized, high-tech imaging. So it gives you, this is one of the reports, but it will give you transaction reports, total reimbursement. And what we do at 3 months, 6 months, and at 9 months, when you're getting ready for renewal, ourselves and the insurance consultant, we do a quarterly review to see how are you running, what's the trend, are you behind, how much are you behind, where. I'll give you an example. We'll use, for this group, they only had 7 urgent care visits. So there, we're going to do more education to bring that up, because we have a feeling a lot of folks are going to the hospital for non-emergency visits. I cut my finger. I can go to the urgent care center if there's one available, and I should, to keep the costs down. One of the ways we're improving benefits to the employees, we also offer Danny, which is a interactive benefit admin system. And when you offer more than one medical plan, it'll walk you through as far as making decisions. How many doctor's visits did you go? Do you have are you willing to accept a higher deductible or lower copays? So it's very interactive. It'll walk you through. There's also modules available, because we offer one price and all the modules are turned on. So there's payroll and carrier connectivity. So we can connect to your insurance carrier and also to your payroll carrier. There's also integrated COBRA on there. So you can go into the payroll system, terminate an employee. We get the notifications sent to our system. And then from there, we can take over and send out the COBRA notices to the employee. And then also you can do what's called passive and open, where we can have the employees be sent a link to sign up online, and then you as the HR administrator can track who's signed up, who hasn't signed up, and you can reach out to them. Another thing that comes with our medical expense reimbursement plan is a wellness component. We bought a wellness company 4 years ago, and we put these components in there. So you can create a wellness component, and you can reward certain behavior as far as healthy behavior. There are online health videos, live wellness webinars. You can do an employee health assessment. We have Fitbit integration. We're working to get an iOS for Apple. And then there are reports that the member can get as far as the utilization. This is ours. This is actually our own. So if I get a physical exam, my deductible goes down by 50. If I get an annual flu shot, $50. We offer an HSA. That's why that's there. If I get a COVID-19 vaccine, I get an extra PTO holiday. And then this is testing for certain diseases and conditions, which is 100% employer paid by us. So I do all this. I was looking for more. Me personally, I was looking for more rewards. I'm like, anything else you need me to do, I'll do it, because I do these things to begin with. So the behavior was easier for me to continue to do these things. Survey from last year to our employer groups, 60% said they used the difference card to improve benefits to offer their employees. Again, as a retention tool, and also as to attract employees in the labor market. So 60% had said they'd do that. With our technology and our MasterCard technology, you can have multiple accounts. So you can have commuter accounts if you need to offer commuter, traditional HSA, FSA, dependent care accounts. Lifestyle, there's about 23 different type of accounts that we offer. Things such as home office, a bike account, gym account, gas account, food. Again, there's certain things you can do. You can offer your employees. When last year, when we had the gas crisis, a lot of companies would offer a gas stipend with a card. So $100, a month, or $50 or $75. It doesn't matter. You can put that on there. Some companies are offering because of the prices of groceries, they're offering a grocery stipend. So there's other ways you can reward your employees, and we've noticed that certain generations are geared toward those type of rewards because they value those rewards. As far as client satisfaction, for us, it's just not a cliche. It's very important, because at the end of the day, if our client is not satisfied, if the members are not satisfied, then it defeats the purpose of why we do what we do. As far as open enrollment meetings, we do multiple enrollment meetings depending where you are. We can do live, we can do hybrid, we can do Zoom, we can do multiple ones if you have employees that work different shifts or work on the weekends. We are very flexible and adapt to what you, the client, would need from us. We offer to do multiple enrollment meetings, especially after 30 days out or 60 days out. So we're a champion to do that. You do get an account manager that is here housed in the U.S. That works for us. They are W-2 employees. And again, as I mentioned, as far as average speed of answer when it comes to if an employee needs to call in and they need help or they have a question about it, well, we can do that. We do create a custom welcome kit for the employees. We'll create a micro a website for your company, and then we have live and recorded onboard meetings, and we can do them also in Spanish. And then as far as our customer service, there's about 50 different languages that we offer if you need customer service help in a different language. Members can download their card, their MasterCard on their mobile app, iOS or Android, and they can also put it in their digital wallet. I do that because I just download it on there. So when I need to use it, if my doctor has a smart card reader, I just tap it and it works. And there we go. Okay. And I'll skip this. I'll work with your insurance consultant as far as getting what information is needed. So thank you. If we can open it up for Q&A now.
Yeah, thank you, Gus. That was fantastic. I think it's real. I love when when Gus shows us these illustrations because it really just paints a picture of, the story that you're trying to tell, which is, improve benefits and lower out-of-pocket costs for employees as well as employer premium. It sounds like a too good to be true scenario oftentimes. And
Yes.
so when you can really get in front of the CFO or whoever the numbers person might be at the organization, this outlines it very clearly, and it's a great way to strategize renewals moving forward, right, Gus? We've had these conversations where we've identified within those groups via some reports that maybe there's utilization with some of the benefits that we don't want those employees to use, or maybe we want to better incentivize other benefits. It's alarming and somewhat disturbing if you've seen any of the numbers recently that have come out on Americans that have put off healthcare services due to the anticipated cost. People aren't going to get medical care because they're afraid of the cost that they will incur. And if you can implement a MERP strategy with the difference card where they can go to their primary care visit for $0, I think that's pretty fantastic. And you're showing your employees that you care about their well-being. So that's those management reports are what I was referencing there, where you can use those reports and strategically work with the group or the business on how to tweak the plans moving forward or the medical reimbursements to really incentivize that proper utilization for the group. So Gus, we do have some questions that have poured in here. Is the stop loss part of the MERP premium?
Yes.
Yep. So as well as the service, the per employee per month, that is also included, correct?
That is correct, and that is a flat fee. So per employee per month. So obviously, if you have 30 employees, that's what the fee is. If you go down to 25, then that's what the fee is. So that is a constant fee. It does not change because it is a flat fee. Yes.
Fantastic. So the benefit admin platform, Gus, I'm sorry, I was trying to look it up here. Do you know offhand when your webinar is with Elise from URL here?
Yes, it is. Let me just.
So for this particular question, I think it'll better address. Elise from our Health Plan Options Department is putting on another webinar with Gus. Go ahead, Gus.
April 19th.
April 19th. So go ahead, Karsten, you might want to mark your calendar for April 19th. Gus is going to be doing more, Gus, correct me if I'm wrong, but I believe you'll be doing more of a focused webinar on your benefit admin solution.
Correct.
So that'll talk a little bit better on how that works. But Karsten, to answer your question, if you chose to use the difference card benefit admin system, Employee Navigator would not be in the mix. So it's just one. The difference card is one benefit admin solution, in addition to the Employee Navigators or the Bernie portals or Benefits Connects of the world. So it's an option, and it's really slick. So that Danny, that AI feature is really cool. So I would encourage you to check it out. We do have some groups that have looked into that benefit admin system. Yes, HSA is managed. Difference card is a TPA, so they're managing that. They're administering that HSA lane. So some services are paid with the card, and others are reimbursed. Gus, can you walk through an illustration of maybe how a member would use a car for a copay related procedure versus like if maybe they have a qualified high deductible plan and there's not a copay on the spot, how that works from a member experience? I think that's what this question pertains to.
Yeah, absolutely. So anything that's on the current plan that's a copay, we can duplicate. The technology on the car can duplicate. So the example would be, again, that medical gift card. Think of any gift card for any store. When you go to the primary doctor, when you go to your urgent care or emergency room or your pharmacy, If there's a $10 prescription and we're funding, let's say, $5 out of that, you swipe our card, $5 comes off, and then you pay as you normally would pay: debit card, cash, credit card. Now, the real cool thing is if you have, let's say, an HSA with us, an FSA with us, or even a limited FSA for vision and dental, and you have one of those accounts, then it's just one swipe. $5 comes off your FSA or your HSA, and $5 comes off the MERP bucket, the funding. So literally, it is one swipe. The employee, the member, walks away as they would normally do. So you're allowed to do that. Anything that's deductible that needs to be reimbursed, because of IRS regulations, we need the explanation of benefits, that EOB, because a lot of times the provider is going to bill you $1 amount, but then all of a sudden the EOB is a different dollar amount. And the reason that is, it's the crazy the way it's done in health insurance. But a clinic, a carrier, a provider is going to send the claim to the insurance carrier. They're going to look at it. They're going to verify it's the right service. You're still a member. They're going to adjudicate it. And then that EOB is sent. Now, there's a couple ways you could take that EOB and give it to us. You can fax it. You can take a picture of it. You can email it. You can even mail it, good old mail. So once we have that EOB, I personally use my app on my phone. I take a picture of it, fill out 3 pieces of information, send it in, boom. Within 2 business days, that money is reimbursed back to me. So it's a very easy process. Now, we also have the capability where we can do direct connectivity to the insurance carrier, where anytime there's an EOB generated, it automatically gets sent to us. We receive it, we process it, and then we can release the funds. So me as a member, I don't have to do anything per se because that is being generated automatically. So there is a couple ways to do that. But yes, anything that's a co-pay, we can use the card to duplicate that.
Awesome. Thank you, Gus. Limits to group sizes. No limits to group size, correct, Gus? We're just going to see. It's all going to depend. Generally speaking, the larger the group, the more we're going to be able to carve out some savings, right? Not always the case, but generally.
Generally speaking, as a good rule of thumb is if you're spending $300,000 or more a year for your medical spend, then it warrants us to look at it. But we have groups in California, in Maryland, New York, where it's a small group but very rich benefits, platinum plans, and we're able to help them. So yes, I showed you a 92-person group, a 32-person group. I'm working on an 18-person group. So size does not matter per se. It's more about your premium and what type of plan you have. Those are the 2 components that really determine whether we can help or not.
Yep. Great. Thank you, Gus. Okay. It looks like those are all the questions we had for today. Great questions, everyone. Thanks, guys and gals. Great attendance, great engagement. Gus, fantastic job as always, my man. I appreciate you. Everyone, thank you for attending. Next month we have new benefits. So these are going to be non-insurance benefits. Think fertility, pet discounts, acupuncture, mental health services, a lot of really cool stuff that you can kind of add on to your current insurance carrier or benefits, kind of like how we can tack on this difference card solution for you. So please sign up and register for that if you haven't. Again, all these webinars are recorded. You can access them, go back to them, reference them at any time. Consider Gus and I a resource. Please reach out, follow up with any questions you might have. What else? May we have benefit admin system integrations. So we'll be talking more about other benefit admin systems we offer. Obviously, Difference Card is one of those solutions. And then June, we have FMLA lined up what it is, how it works. I know, snooze topic, but very important and very timely, I think, with the changes to FMLA. So please tune in. Please provide feedback on any content you'd like to see that you haven't seen yet. And I really look forward to seeing everyone on the next webinar. I hope you enjoy the rest of the work week. And like Gus said, hopefully everyone's dodging the snow today. Take care.
Thank you. Stay safe, everyone.